Hello, my fellow crypto enthusiasts. Thank you very much for joining me today as I am going to be talking about some risks popping up and presenting themselves and FUD appearing in our crypto news regarding Bitcoin. Now, there is, just going to jump right into it after I take a nice, wonderful sip of this Red Bull I have here. Giving Bitcoin wings since, I guess, 1996. Fantastic. Probably very unhealthy, but it is what it is. So, jumping right into it, trust in crypto could rapidly evaporate, disrupting financial markets, ECB official says. As we get into it further, Isabel said, the euro is backed by the ECB. Which is highly trusted, and I completely disagree with this highly trusted, but we'll just continue on here for the moment and get back to that in a second. And it is legal tender. Nobody can refuse to accept the euro. I don't know necessarily about that, but Bitcoin is a different matter. Isabel dismissed the cryptocurrency as a speculative asset without any recognizable fundamental value, and said it's subject to massive price swings. And she's concerned that confidence could rapidly evaporate because it is a fragile system, and warned this could create disruption in financial markets. Not only that, excuse me. She's arguing that it does not fulfill the basic properties of money. Let me just decode this for you. Arguing that it does not fulfill the basic properties of money, essentially what Isabel is saying, there's no government that will put a gun to your head saying you have to use this and nothing else. So it's not money. It's insane, actually, because the euro is currency and... excuse me, Bitcoin and gold and silver are actually money. The speculative asset without any recognizable fundamental value. No, actually, the problem is she's wrong there. It does have value, and the value it has is given to it by Metcalfe's law. Now, she clearly doesn't know what Metcalfe's law is, but it's the value of networks, and people have decided to use as a median of exchange. What prevents the manipulation or distortion of Bitcoin is the blockchain and all the miners, and they provide the integrity. So when you get a Bitcoin, what you actually have is a Bitcoin, and it's not duplicated. And that is what backs it. Now, it's not as though there's something there backing it, saying that you must use this, which she believes adds value. And I guess in a certain way that does give the euro and other fiat currencies value. But she's saying that this doesn't have any value, which is incorrect. People are giving it value. And not just that, the actual mechanism that allows Bitcoin to function gives it value. And then she pretty much dismisses it subject to massive price swings and volatility. And we can actually break that apart in a moment, in a couple moments. But anyway, and then she argued that it does... when it was argued that currencies such as the euros don't have intrinsic value either, and it's simply based on trust, which they are, in the same way that, in a somewhat similar fashion to Bitcoin, she said the euro is backed by the ECB, which is highly trusted. I mean, if you were to say, change the sentence, it would be the Bitcoin is backed by the blockchain miners who don't need to be trusted entirely, because you just need 51% of them to be trusted. And it is legal tender, which is what the euro says, but this is a unit of exchange. So the Bitcoin is Bitcoin is backed by the blockchain and miners who don't need to be trusted. It's trustless, which is fantastic. And it is the perfect unit of exchange, or it is a unit of exchange. Nobody, can manipulate Bitcoin, and without force, Bitcoin is widely accepted, which just speaks to its value. So there was a vote on this actually in Turkey. So the Turkish lira went pear-shaped and is going down the tubes, spiraling, circling the toilet. So the people in Turkey have a choice to either go to the dollar, go to the euro. There are digital dollars out there, USDT, USDC, DAI, many options out there if somebody wanted to have, a crypto dollar equivalent, or they could just go to the dollar. There's no crypto euro equivalent that's widely used as of yet, but people could do that. And what do? They went to Bitcoin. That's what they did, and that's where they went. They went to Bitcoin. Turkey's slumping lira adds fuel to crypto trading boom. Turkey demands user information about cryptocurrency platforms. Makes sense because they just, that's how you back your fiat currencies, through force, guns, and power. Not through the actual choice of the people and the citizens, because it's not like these countries claim to be democracies. It's pretty much monetary dictatorships. And they just don't care to actually, admit it. Isabel, whether you like it or not, you work for a monetary dictator. You don't work for a democracy, a symbol of democracy. The European Central Bank, the United States Federal Reserve, the Bank of Japan, although Japan and Asian countries are they're friendlier to cryptocurrencies in some ways. But no. None of these central banks are democracies. They're dictators. So Bitcoin searches spike in Turkey as central bank chief fired. Lira plummets. And she's talking about trust in crypto could rapidly evaporate, disrupting financial markets, yet Turkey fired their central banker, the chief central banker, which would be the chairman of the Federal Reserve in the United States. He got fired, so people have no confidence in their central bank. And it looks like confidence is rapidly evaporating in Turkey with their regarding their central bank. And what do? They went to the trust list. You don't need to trust Bitcoin because it's distributed. It's decentralized. If there's one corrupt miner, that won't impact the system. Even if you get a group of miners to be corrupt, still very difficult to impact the system. The system is built so it is not impossible, but essentially it gets very, very close, probably as close as you can get to being impossible to corrupt. And in that way, you don't need to trust or have confidence in Bitcoin. It just works. And just because of the fact that it works and you don't need to is why you trust it, and why so many people do, and why the people of Turkey have voted. It was a vote. Whether you like it or not, there was an election in Turkey, and it was the dollar, the lira, which was obviously going to lose, get annihilated, the euro, and Bitcoin. And people voted, and they're choosing Bitcoin. So do not fall for these false claims central bankers will make. they're, first of all, dictators. Second of all, any ECB official or employee of the ECB or the Federal Reserve or any of these, their business is the dollar, is the euro, is the yen, is whatever it is. So of course they're going to say this. So you should not trust these people and their opinions on cryptocurrencies. I'm talking about this article because a lot of people do who are not into cryptocurrencies are getting introduced. And hopefully you share this video with these people and they do get introduced. But what you have to realize is the fact that that's the business they're in. Go to somebody who's independent, neutral, does not have, any interest in the euro, dollar, or etc. Yeah, there'd be people who buy Bitcoin, and I'm into Bitcoin, and I own Bitcoin, and so on and so forth. But I have no incredibly massive stake in Bitcoin, in which case, this matters to me. But there are even people, don't trust me, go out there, I'll tell you, talk or, read up on a lot of opinions from a lot of people regarding it. And you will actually get a fantastic understanding. There are entities out there. There are banks out there. Bloomberg analysts are saying, they believe Bitcoin could go to $400,000 this year. $400,000 a Bitcoin. So, yes, what you need to understand and realize is not to fall for the traps that our governments are putting out there. Moving on to the next risk out there, and fear, uncertainty, doubt, or FUD news articles, is that there is a warning when it comes to the climate impact Bitcoin has on our Earth because it uses so much electricity. Well, yeah, that is true. It does consume a lot of electricity. However, financial markets are extremely important. We're never going to barter, so we're going to have a unit or a median of exchange. And you have to do a cost-benefit analysis when thinking about that. And when you look at the euro, you look at the dollar, you look at the yen, these are mechanisms and systemic structures in society set up to make the wealthy wealthier and the poor poorer, and it's just a fraud being committed in front of essentially everybody without the majority of the people realizing it, and that has a cost to human life in society. And now we have a system built that can take away the manipulation, can take away the distortions, can take away the fraud, and it's expensive. But, excuse me, what are we going to get back? We're going to get back way more than we spend on the energy of Bitcoin. So there's that. And that is a fact that needs to be realized. And I'm not going to delve into it, but there is a connection between the dollar needing to be, maintained as the world's reserve currency and how much the United States spends on defense and how much they set aside for their defense budget. I guarantee those are one for one related. You can value how important and necessary it is to the United States government for them maintaining the United States dollar as the world's reserve currency. And how you value it is you just look at the Defense Department's budget and you see how big it is. That's the cost of, the dollar on our society. Hundreds and hundreds and hundreds of billions going in and intervening in other countries, and toll and destruction and issues that causes not just people around the world, but the people who are in the United States who have to go there, and all of the problems that it creates for our society and the costs. So when you compare it to that, and then when you compare the cost of, Bitcoin, it appears to me even before I'm about to show you the next thing, you know, if I had to make a choice and I had the final say on how society was going to run when it comes to this matter, I would say Bitcoin, hands down, is going to be the better option for everyone around the world as compared to what we are doing right now. But there is a solution to this. I'm going to read the article. This is just a joke, but Kentucky governor signs crypto mining tax clean energy incentives into law. So the Kentucky governor says, look, this is a booming industry. There's going to be a lot of benefits. We're a believer, and so on and so forth. So we want to actually incentivize crypto mining companies to come to Kentucky. Not just that, though. We know that they do, use a lot of energy. So what are we going to do? We are going to incentivize them to use clean energy, solar panels, et cetera, et cetera, et cetera. And one of the things with solar energy and all these other forms of energy is the fact that they need to get subsidized. And the only reason why, there's subsidies for these different industries in different areas is because, it helps, create demand for the products and incentivizes people to utilize the products because there's a benefit to society. But essentially the reason why you subsidize something is because people aren't quite ready to use it yet, but you want them to use it either way because you're trying to get the costs to be reasonable with alternatives. Well, you know what? You can get a lot of demand and probably, to a point where subsidies for clean energy products like wind farms, solar panels, and etc. would no longer be necessary because of the fact that there would be so much demand coming from the Bitcoin mining community that it would help these industries get onto stable footings to move forward and continue to have prominence in society and just grow their influence in society, lower the costs of production, and have just many, many benefits. So, this Bitcoin miners could be leveraged to help clean energy boom. So to just dismiss Bitcoin, say it's too expensive on society, it's polluting, all this other stuff, is just not a real risk I'm concerned about. I'm not concerned about people losing trust in Bitcoin. I'm concerned heavily about people losing trust in the ECB and the Federal Reserve. But we're on to this, so we're going to stick with this. However, the final thing I will say to this is not even in this article, but you'll look up, you'll find articles where there are frackers. So guys who frack for natural gas and energy, they're the energy producers, frackers. What they would otherwise have is wasted energy. Because of the way the process works, so on and so forth. So instead of wasting certain amounts of energy that otherwise would have been from them mining and fracking for these fossil fuels, what they do is actually they will end up building a facility that will produce energy, and because it's kind of in random places and there's other logistic issues, they'll just put Bitcoin miners there and they will mine Bitcoin and get just what would have otherwise been wasted energy and put it towards at least something, which ultimately ends up being Bitcoin. So Bitcoin is, something where it's being used to give wasted energy at least some sort of purpose and value. So, at the end of the day, once again, just lies. And it's because these lies and, it's a lie. Now, when I say it's a lie, it's important to note they may be factually accurate. Yes, Bitcoin uses a lot of energy. It's this amount of pollution it's producing, so on and so forth. That may not be true, but what they're not giving you is the entire picture, because there's an opportunity cost to everything. Not everybody understands economics. Actually, very, very few people understand economics. And one of the biggest things that people, miss out, and it just is destroying a lot of lives, in my opinion, is there's this thing called opportunity cost. So there's not just a cost to doing something, but there's also costs to not doing things. So when you talk about Bitcoin, and try and dismiss it because it consumes a lot of energy, okay, well, you're right. There's a lot of energy consumption and there's a cost associated with that. However, let's look at the alternatives and what are the costs of these and what's the cost of not doing this? And, you compare and then you try and come up with whatever the best value is. But there's always a cost. And there's this thing called opportunity cost. Look it up. But essentially, it's the cost of not doing something and missing an opportunity. So once again, lies. It's deception. Actually, it's not a lie. It's not a lie necessarily. It's deception. It's deceiving. This is deceiving. This is deceiving. This is maybe not necessarily as deceiving as the other two. Peter Thiel, very smart guy, but China may be using Bitcoin as a financial weapon against the United States, which, to be totally honest with you, and even the Chinese realize this, so they're not. Because Bitcoin is a threat to all fiat currencies, with the yuan, which is China's fiat currency, being fiat. So no, they do not want to see Bitcoin become massively, incredibly successful. Yes, they have a lot of control over the people and their citizens, and they have a tight grip on them. But, they also understand the implications of Bitcoin. And, to be totally honest with you, if they had a choice of whether or not Bitcoin exists, they would just probably say, no, we don't want it to exist. And the reason why they'd say that is because we already have advantages over the United States and financial weapons we can use. It's not necessary. And these other financial weapons we can use aren't, something that can come back and inflict harm on ourselves. What, the other financial weapons and tools we have, it would allow us to inflict harm on the United States. This is kind of like throwing, a boomerang where I can hit whatever I'm going to throw this at, but then it may come back and hit me. It may come back to me. So no, China is not using Bitcoin as a financial weapon. It's kind of a conundrum because they do see the ability of Bitcoin to cause disruption. However, they also, see the, amount of control and other aspects that they could use to their advantage. But like I said, it's a double-edged sword, and there is an aspect to it in which case it could come back to bite them. So like I said, if you gave China a choice and their adversaries of the United States, I'm pretending they are, whether or not you think they actually are is up to you. I'm not going to say my exact opinion here, but, let's say they are. If they have a tool set, Bitcoin is not one that they will prefer to use. If they have to use it, I think they would, but, it's not the preferable option. The best actual financial weapon that the Chinese have against the United States is the fact that they make all of our stuff. They make pretty much everything they don't make everything, literally speaking, but they make a lot of the products and services in the United States, from technology to pharmaceuticals to just, basic consumer goods that you find in the store that you need on a daily basis. So if they, and if you actually look up what happened in the 70s and why we had high inflation in the United States, it wasn't because, yes, it's related to poor monetary policy, but here's the two things that you have to understand and how these things relate, because you'll see articles on MarketWatch and a lot of other places saying inflation fears are overblown, they'll never happen, all of this other stuff. Pretty much it's, perfectly fine, things are okay, kumbaya, let's just continue on. And actually, no. There's a process and a mechanism to this, in which case what the process and mechanism is monetary policy primes the system for failure. Monetary policy and the printing of dollars don't cause failure. If you have the capacity to produce, which we do, and I don't know for how long that will last, eventually rubber will meet the road, and we'll have a price to pay. But for the time being, you are not having all the additional dollars that are being created go into consumption, and it goes into production, and we can meet the demands in terms of producing goods and services for individuals and how much they're demanding. And at the end of the day, you don't see inflation because you can see supply matching the amount of demand being heavily influenced by dollars. And here's the problem with Keynesian economics and why it will ultimately fail. And it's nice in the meantime, and it's good for, while it's good. Don't get me wrong. I love government spending and, just printing dollars and all this other stuff, because it's fantastic when it's good, but it is always doomed to fail. It will always fail. It is not a self-sustaining system. It's not a self-sustaining mechanism, and it's extremely dangerous in that matter and in that form. So here's where you end up having an issue. And we're going to have two issues present themselves. And honestly, one is worse than the other. So, and it depends on how rapid things happen over time. So there are a number of factors here. God forbid we actually get to a point where, we hit the brink of what the earth can provide us in terms of resources to produce goods and services. Hopefully that does not happen. Hopefully what actually ends up happening before we reach that point is China's middle class actually rises. And that is actually, whether we like it or not, whether China uses it as a financial weapon or not. And I honestly don't think that they're using it as a financial weapon. I just think they've moved the chess pieces in such a way that they have this, because they want to be the world hegemonic leader of the world. They want to be the dominant country in the world. And the best war is won without fighting a battle. So they've set themselves up and positioned themselves in a really fantastic way. America has been sold out because the people who influence the politics are those who own America, which are investors and owners of our multinational companies, and they have no nation because the companies and what pays them and feeds their families and gives them wealth, have no reason to, pledge allegiance to a single country. And unfortunately, because for demographic reasons, it is more beneficial for these people to pledge allegiance to China. So America is going to get sold out, and the people in America are going to just have their, standard of living slowly decline. And unless the people in America actually step up and do something about this, which I don't think a lot of them will, because there's risks associated with that. And honestly, it's going to be a battle. And, one thing you have to accept is if the American people step up and, try and put, an end to this, they can. And the American people absolutely actually can. And I believe we can change the world. The problem is you have to be willing to pay a cost. That's a simple question. Are you willing to pay a price? But it's an important question you have to answer for yourselves because of the fact that you need to. It's like going to World War II. It's, a world war here. People didn't fight in World War II because they wanted to. People didn't say, let's not worry about World War II. It's going to be painful. It's going to be bad. No, they fought World War II because they knew that, there was a great cost to doing nothing. And the implications for their future and the future generations were massive. So they did it. So when it comes to individuals, here's what you have to realize. China's set up in a way where they're going to have a growing middle class that's going to consume more of the goods that they produce. And they're going to go from a production economy to a consumption economy. And what's going to end up happening is you're going to see prices start to rise because you're not just having demand from around the world, but now you're having one of the largest countries by population have internal demands also coming, and it's going to put a squeeze on supply. We already see shortages today in a variety of industries. So, and it takes a number of years to actually build out the capacity needed to meet demand. So we are already in a situation where we're starting to see this, and if you actually look up computer chips, you'll see that the prices of computer chips have incredibly skyrocketed and gone higher, or you just can't get your hands on one. That's going to come to a lot of things at your local Walmart. Now, that's going to happen whether we like it or not. And the only good thing about it is it happens so gradually, and it creates opportunity. And what the opportunity is making things in America again. Because the price of goods are going to go so high that it's then going to be pretty reasonable for people to actually start producing goods in America again. So it'll create opportunity, but we have to be ready for it. You have to be ready for it. So it could be good, but once again, like I said, we have to be ready for it, and as Americans, you have to make a choice. And it's going to be somewhat painful, but it's not all bad. There is going to be a price that has to be paid, but it's not as though as it's the world's ending. For everything that bad that happens, there's an opportunity. So, are we going to be ready for it? And that's the real question. But whether we like it or not, that's going to happen. Hopefully China does do that. Hopefully that does lead to our inflation. Hopefully we, end up biting the bullet a little bit. We have to deal with the inflation pain, but then that gets us to the point where we actually start producing things in America again, creating good paying jobs, making things, and, it ends up being, somewhat of a bittersweet moment, in which case we actually get back a middle class in America. Hopefully this alternative doesn't happen. We continue with the status quo, and we just continue with living beyond our means, and we continue going about this, as we are, and we continue spending more than we otherwise should and we otherwise make, and then we end up hitting a point in which case we've consumed, and sucked the planet dry of resources, in which case there would be extremely very little we can do, whether we like it or not. In either circumstance, one thing Americans need to realize is whether we like it or not, our lives are going to change, our lifestyles are going to change. So those are the problems we're facing, and that is the biggest financial weapon that is going to happen. And it's very, very well done. It's not financial, it's not numerical, it's not, as direct, but it's indirect. But it will be as financial, and it'll be the greatest financial weapon that they have. So when you look at this article, no, China's not a threat to the miners. China's not a threat to the United States using Bitcoin. The dollar is the problem. And the reason why the dollar is the problem is we're priming a system. We're building a system bigger than what can otherwise be supported when reality comes to us, when the rubber meets the road. And that's what's dangerous. You have a company like Roblox, and it's like, okay, fantastic. And then you have a bunch of other internet companies come up, and it's like, wow, there's a lot of these. And it's like, all right, well, how can they actually sustain themselves? How can we do it? Well, literally, I guess it's infinite. You can have an infinite number of people on this, let's just say we go out, further. Population continues to grow, a number of internet companies continue to grow, we're creating more customers, and, the ability for there to be customers in demand, for more businesses that are online, and, it kind of like, makes this self-sustaining thing. Well, yeah, I guess we're creating jobs that are good, but here's the only problem. Like, the earth isn't, infinite. The internet's infinite. The earth isn't infinite. And essentially at some point, we're going to have to feed all of these people. And, there's a real world that is, a part of all of this. And that has to also accommodate the whole entire situation. And that is where we get into a dangerous point, in which case we've overextended ourselves. And then what do we do? So hopefully we do not get there. I don't think we will, but I do think we're going to deal with a lot of inflation. But it's not because of Bitcoin. they may say it's because of Bitcoin. No, that's not the greatest financial weapon. The greatest financial weapon is the fact that China makes a lot of our goods and services here in the that we use and consume here in the United States. And your best safety net actually to this is Bitcoin. And the way in which case we have monetary policy and government spending is creating the problem and making it worse. So the solution is not the dollar. The solution is, not, working against Bitcoin. The solution is actually producing more goods and services in the United States if we don't want inflation. But people in the United States know what's going to happen. They read the writing on the wall, and when it comes to it, the problem we're going to have is going to be that, and it's going to happen over the next 5 years because that's China's plan. They've had their middle class growing for quite some time now, and they want it to continue to grow. So those were our risks, and I'm not worried about any of them. I feel good. I feel like I took a lot of these down and I crushed a lot of these, and just, there would be more, and I'll talk about them more. But if you're going to Bitcoin, stay calm and hodl on. Now let's just take a quick look at the crypto markets and see what's happening. I'm looking at this on a weekly basis, and why I want the chart like this is because this is what I think is going to happen. I've talked about Bitcoin downshifting. We're not going into a bear market. We're not going to crash. What we're going to do is see Bitcoin downshift. And you've seen these parabolic, rip your face off, crazy moves. And that's because we got retail piranhas out there. If you actually look up a list and it goes Bitcoin whale and it goes all the way down and then it talks about shrimps, and I'm like, let's give them a cool name, because it is true to a certain extent. Like piranhas, they're very tiny, and there's they're not in size, what is it, like a whale. Obviously they're tiny, but when you look at Bitcoin, the pumps that you see in Bitcoin are not because of the fact that you have whales coming in. The pumps you see in Bitcoin is because you have all these retail investors coming in and buying tiny little bits and pieces of amounts of Bitcoin. And, it's kind of like piranhas. Something gets into the water and then just like a friggin', swarm of them, hundreds of them just come and they all nibble and they just clean it dry. Take away whatever that was in there and leave it bone, just leave bones behind. So retail piranhas come in and they just suck up Bitcoin like crazy. And that's why you had this rally. And then that's why you had this rally. But if you actually look here, 2020 finished in a Bitcoin piranha retail Bitcoin piranha rally. That was Bitcoin piranha rally. And then we saw a drop back, and then we saw a rise, and then we saw a drop, and then we saw a rise, and then we saw a little drop, and now we saw a rise. And I think you're going to continue to see adoption. I think you're going to continue to see sovereign wealth funds come in. You're going to see more people who have, financial advisors with Fidelity and a bunch of other, companies out there. I think you're going to see more companies start to, get Bitcoin on their balance sheets. And what you're going to end up starting to see is more of a 45-degree angle upwards, in which case, we're talking about 250,000 upwards of 350,000 is where we could end December. Now, I don't know if this is going to happen. This is what I think will happen. Could we go up to 200,000 and then do one of these Bitcoin crashes that seems to traditionally happen and be what happens quite often? Yeah, that's actually entirely possible, and something to be on the lookout for. We could crash. We could go back down to 50,000s after all is said and done. We go up and then we come back down to the 50,000s. This may not be the last time. If we break above 60 decisively, the last time we see it. But just from knowing how stocks go and knowing how institutional investors work and just doing a lot of reading up on this. As the market cap of Bitcoin goes higher, you're going to start to see different price action, and what you're going to end up seeing is more of a stair step, but it'll still be incredible. It'll still be good. I mean, when you take away the log, that's what you're going to have. So you're still going to have this parabolic move, but when you put the log back, it's going to be on a 45-degree angle, but it's not going to be as volatile. It's going to have a stronger footing beneath it, and it's just going to have more confidence in it, and there's going to be more stability, and it's going to be beautiful if you've already bought in. But let's look at this. I was talking about it a couple days ago, and let's see here. So we ended up having this wedge form right here. Or no, oh God, what the hell am I saying? We ended up having this head and shoulders pattern starting to form, and then we got to here, and I said, this doesn't make sense, because we're not just going to go back down to 50,000-ish. If this ends up happening, you have to get down to 46,000 and whatnot. And I just know there are a lot of people out there who want to get the coin. And then, when you go down there, you don't just go down here and then, bounce higher and then we go higher. No, when you end up having this happen, it's a bullet, or it's when you have a head and shoulders topping like this, it's a bearish reversal. So that would mean we'd have to go down to around 40,000 and test down here. And now you look at where we started the year, and I said, we're not going to end up having a 33% or, 30% or 20%. It seems very weak for Bitcoin. In terms of year-to-date return, and that'd be taking us, kind of into May and 5 months in, and then, maybe we go higher, but we're going to go higher into June and just, barely be at where we are. And, what you have to take into consideration are the surrounding circumstances and economic environment and, certain things that drive the price of Bitcoin and what they're doing. And it just didn't make sense. And as I was looking at this, I said, well, it looks like we actually have a rising wedge forming, and there's some room to go higher. Not just that, but then I saw, wow, we have a reverse or an inverse head and shoulders forming, and we got to this point, and I said, and then we got down to here, and I made a video about this, and I said, the path of least resistance, because you have to break this trend line, and not just that, you have to break a 50-day moving average, which doesn't happen often, but it seems as though the path of least resistance is higher to complete this inverse head and shoulders. Now the funny thing is, I'm not going to do it, but you look down here, this bottom, it was a head and shoulders inverse bottom. So we had, it's bitception, like inception, but with Bitcoin, where you had a head and shoulders pattern here, you had a head and shoulders pattern here, and then this will not complete, but we started to have a head and shoulders pattern forming here. It was insane. It was almost like, it's scripted, but it isn't. Anyway, so we came down, and then we got to this point, and we struggled there, and it is going to be a battle. We're selling off here a little bit, but anybody who says, oh well, this is the final actual tip, we haven't even, no, we've gone through this, and this is a completion of a head and shoulders pattern, and we're going to break higher. It's going to be a battle. You're going to have people come in and sell it, but this right here, that's the thing. One higher low, and then a third higher low we formed here, or higher bottom, well, a higher low, and then that's got sucked up. So this is telling you buyers are in the market. They're there, and any price movement down is getting bought up quickly. And then yes, you're getting up to this point, and I don't know who is selling, but you're not selling into weakness. You're selling into strength, and you're selling into people who want to buy. And then we got to this point, and pretty much, a lot of people who are bears and shorting this read the writing on the wall, and you started to see some of them walk to the exits, and then that ended up, as you close out your short positions, they ended up being the demand for Bitcoin. And essentially, as they just didn't, they were the weak hands. And as they started to go, more people did, and then you had this bounce up here. And now we're at this point, and we still have some shorts out there. We still have some liquidation to go through. So if you could, we're getting to them, but it still exists. But literally, it's going to be a battle. You're going to see some more selling, come in there. But there's plenty of buying happening, and shorts are getting liquidated. But, once we hit through here, we could go, I believe we're going to head up into the 70,000s for April, and we'll end April somewhere between 70, 80,000. And it's going to be good, and then we may sell off and, retest the bottom trend line here. But we're going to end up starting to move higher, and you could certainly see 100,000 Bitcoin before the end of the year. We're going to have a staircase higher. Because what essentially will happen is you're going to see, a rise, and you're going to see it go up, and institutions are not going to be buying it here. And then you're going to see, it come down, and they just have teams, and they just have great patience, and they don't tell their hand like Bitcoin whales do. Bitcoin whales try and move money in and out, and they do spoofing and with limit orders and all this other stuff, and they just try and manipulate the market. And I mean, in the real world, is there manipulation? Yes, there's manipulation and those kinds of things. JP Morgan Chase had a lawsuit where they had to pay $1 billion because they had traders manipulating the silver market. So does it happen? Yes, but what these institutional investors, and this is a warning to whales, what these institutional investors are great at is they're going to hold their hand tight. You're not going to know they're there. And that's why, you ended up having whales come in. And I saw a news article, whale alert, and then it was a sell-off, and then it got bought up quickly. And I guarantee you those were institutional investors buying it up quickly. And there are whales who thought we were going to go down to 40,000. So they were waiting in cash, and then they saw it got bought up. And now they're, sweating a little. And it's because, there are Bitcoin whales out there that are sophisticated. There are also Bitcoin whales out there who just got lucky and just got burned. So the institutional investors are not going to show their hands, but they will have deep pockets, and when there are sell-offs, they'll buy them. But they're going to buy them, and they have the discipline because it's not individuals. There's no emotion. These are teams, and just pretty almost as systematic as you can get. These are teams of individuals working at companies who just pretty much have it down to a science where you're going to see it go higher, and then they're going to buy. They're just going to buy where it goes up. They're not going to buy. I mean, yes, ultimately do like investors buy things that go down? Yeah, but in this scenario, when you have so much room to run for Bitcoin, and I misspoke the other day, the top 10 global stock markets, and this was in 2020, combined to have $100 trillion of market cap for all their companies listed on there. So it's obviously gone higher since, and there are more than 10 stock exchanges. But if they were just have 5% of that go to Bitcoin, that's 5 trillion. So you're talking about Bitcoin could easily be, if investors diversify out of stocks and into Bitcoin, 5 trillion. And we're at $1 trillion right now. So literally, you're not talking about crazy levels here or insane points. But the point is there's a lot of room to run to the upside. But how are we going to get there? We're not going to get there through these, crazy 2013 type, run-ups and crashes. What you're going to start to see is a staircase higher and institutional investors buying on the bottom trend line. And we may break above it for a little bit, and then that will be a point in which case, you may have what's called otherwise a bear market. We may break below it and, have a bear market and so on and so forth, and some other things happen. But you're going to see volatility compress, and I think you're going to see more of a 45-degree angle higher because Bitcoin's a great thing to have. And I think, we're just at the beginning points of this, and, we're not at a point where, we're ahead of ourselves. So, but that's how you're going to see. The floor is going to be maintained. This 45-degree angle is going to be maintained by institutional investors. And then if we run up any higher, there would be a certain extent to that and so on and so forth. But this is how, I expect it to play out personally. Anyway, given that I talked for a while, but covered a lot, hope you all have a wonderful rest of your Saturday. And yeah, no, we're not just going here to then collapse. No, Bitcoin is going higher, and it has been a lot of fun. Can't wait to see Mara and Riot open up on Monday. The stocks, the Bitcoin mining stocks, and yeah, BNB has been crazy. I'm gonna make a video about that soon. Binance Coin. A lot of people hate it because there's centralized decentralization and whatnot, and it's almost oxymoron, but whatever. Anyway, everybody have a wonderful rest of your day. Enjoy your weekend. See you later.